What's up, guys? It's November 26th, 2024. I think today was a challenging day. I am down 8 points today. We got one day left until the last day of the month, and then it's Thanksgiving, and we start December. Interesting time we're in. We're approaching the previous swing high. We've had 1, 2, 3, 4, 5, 6, 7 bars in a row with no bear bars. A lot of tails. Bears are getting trapped. They're not getting filled unless they're market ordering. Again, we're looking for a measured move of these bars here. Oh, no. That should be locked. Okay. Put it below the pullback, and that takes us to 6,200-ish. That's a lot to ask for, but I mean, last day of the month can get, I don't want to put any thought in people's heads, so we'll just see what the price action gives us tomorrow. Right now, we're channeling higher, a lot of overlap. We're creating a fourth leg. One stuck on. Why does that happen? That cracks me up. It starts small and then just goes big. Leg 1, breakout, pull back leg 2, pull back leg 3, pull back leg 4. When we're in leg 3, we automatically start to think trading range price action, so we are approaching highs. And we'll see if bulls get the breakout again. So that's 3 legs right there, but every time we make a new high, we can also count 3 legs. So let's say this is the previous swing high, so leg 1, pull back, leg 2, opposite bar, pull back, leg 3, go range bound. This rally breaks out of this swing high, leg 1, pull back, leg 2. I trade second legs because it's the highest probable trade. Ever. No, I'm not playing. I mean, I don't really know. I shouldn't have said ever, but there is a good chance when a move happens, 3 different types. So when we see a leg 2, let's just say 24, 25, 26, 27, 28 is a leg 1. 3 types of traders are seeing this. The traders who press their bets on 24 want to add to their position, so they're waiting for a pullback. The bulls that are trapped here are waiting for a pullback to either buy more or get out at less of a loss. And then the third type of trader, which is us, is we're waiting for the move, we're waiting for the pullback, and we're going for a minimum one tick below the previous swing. 3 eyes on one move makes it a good move to catch. And you know, the ABCD, break and retest, they're all the same name. I call it leg 1, leg 2 moves. It's all the same name. They've been around since the dawn of time. Since before the dinosaurs, leg 1 and leg 2 moves have been happening. So let's get into it. It was a challenging day. I took 2 losses real quick in the morning here. I actually took all 3 losses were short. Now I'm thinking about it. I'm trying to go for a swing. You know, I held a position from here to here and made about 6 points. Let's see exactly how much I made. Okay, that's not right. I must wait, where's 6 points at? Okay, never mind. I must have got out here. I'll have to look at my P&L, but I did not make. I'm down 8 points today. Gap up. Bar 1, bull bar. Bar 2, 3 is a pullback. Bar 4 is that bar 4, and the tail of bar 5 creates a leg 2. Then we have a deep pullback for the bears, leg 3, leg 1, pullback, leg 2, right? Because bar 7 breaks the trend line. Leg 1, pullback, leg 2, pullback, opposite bar 9, leg 3. This is where I got short. I got trapped here. I got out on the high here. And then as this was breaking out, I market ordered in and just got out here. So I took that. This little maneuver here is what put me fighting red. Bought this. Again, I guess I got out around here. I know I got out on 54, so I might have bought here. I have to look at my P&L. Today was a tough day for me. Yeah, so it's a broad channel. Every new high got sold, so bulls are taking profits at new highs. What does that mean? That means bulls are more concerned about buying low than rather buying high. So yeah, it's a bull trend, but every new high gets sold, so bulls want to buy low, sell out new high, buy low, sell out new high. Second leg trap, we're testing lows, testing bar 36, bar 60, 61 rallies, we go sideways, and then we rally to yesterday's high, EOD. So bears get 3 legs lower, bar 12, strong reversal bar, trapping bears like myself. Bar 13 gets a pull, bar 13 is a pullback. 14, 15 is that leg 1, pullback, leg 2 into this high of the day. 16 is a pullback for this. 17 is what I bought. 18 we rally but pull back. 19 is another rally. Now we somewhat have a wedge top. leg one, pullback, leg two. 2021, deeper pullback than I would have liked, but 21's tail let me hold my longs, and then we rally. Right, okay, I remember now. I remember how I did it. I bought this, got out here, and then I bought this bar or this bar, and I got out here. So that was the 6 points. I remember now. Yeah, just about like that. Something like this. I bought that low. So I bought this bar, got out here, bought that bar, got out there, and made 6 points. There we go. And then I got trapped here and lost to 8 points. I was like, I threw it in the towel. Just tough day for me in terms of holding a swing position. 22, 23, 24, 25, 26. Strong enough for its own second leg. In trading range, we get delayed second legs. Leg one, pull back. Leg two, we bar 30, went one tick higher. Or you can see this as its whole leg one. And then bears get a wedge bottom, leg one, pull back, leg two, pull back, leg three. Testing the high, bar 22. Another two-legged rally here, leg one, pull back, leg two. So if you scalp out, bears get there, second leg, pull back, leg one, pull back, leg two. And then bulls get another two-leg rally, leg one, pull back, leg two. You see how it is today? Let me know how you guys did today. Maybe I was the only one who was fighting red today. Taking 2 early hits in the morning kind of messed me up. And then we had FOMC minutes, but nonetheless, we just traded the price action. Bar 58, shot and forget zone, second leg. Bar 57 to pull back. Bar 59 creates that second leg. Excuse me, I'm a little bit tired. Bar 60. So I actually shorted. I saw bar 60. I saw bar 59 rallying, and I shorted it on its way down, and I got trapped around here. Leg one, pull back, leg two, second leg trap into support, and then the bulls rally for the end of the day here for about an hour, with the 75 and 76 being the nice climactic big bars we look for. Even though this was climactic, it got its pullback and retested here. If we look at the overnight price action, let's see if we went one tick above 77. So we didn't go one tick above 77. Man, I saw that breakout last night and I was like, wow, the market's gonna sell. Ended up being the start to a good rally. So let's look at the gaps. We don't have too many gaps today. There's a lot of overlap. I know there's one here, zero height gap. And we have the gap up. No, now we have a zero height gap. That's a 5-bar marker rally. That's good enough for its own second leg. We have another gap here across the EMA, so that's a breakout gap, rally, pullback. And then we have bears get a gap here. Not the best gap because it's a bull bar, bear bar, bear bar. We want to see bear bar, bear bar, bear bar. Excuse me, that was tough to say. The high of this is 28.25. The low of this is 28.50. So there's a one tick gap right here. Again, not the strongest because we want 3 bars in a row, not opposite bars. I think there's one more gap here. And then let's go for measured moves. Bar 12, I think is strong enough to get its own 1-to-1. 1.5 bars met here. Bar 55, a little bit. There we go. My target was like this. And that was met. But I'm not holding longs through this in case we spill over. So there's another move. It was tough because a lot of times we get 2 bars in the pullbacks rather than 3 bars. 5-bar rally, bottom here. 1R's met. In trading ranges, we look for 1R rather than 1.5R. 1.5R was met, but we'd have to sit through deep pullbacks, and you'd have to sit through FOMC minutes. That's not something I recommend. Bar 56 is strong enough to get its own second leg, but it's not a setup I take. However, you put it at the top of the pullback, and 1R is not met. I like to wait for the breakout, the follow through, and then assess the pullback. We don't have 3 bars here, but how could you take this with the context? So look, this rally, and then we have a delayed second leg. So you can count this as a leg 1, pullback, leg 2, deep pullback, leg 1, pullback, leg 2, bottom of support. You can buy 60 for the rally here. That's where I got trapped. So it was a challenging day for me. Let me know how you guys did. a little bit shorter of a breakdown because there was not too many setups. I like to look for at least 3 bars in a row. So there's 3 bars here. And it's 3 bars here too, so we can I've yawned like 6 times. So, that's the first pullback. Your 1R would not get hit, but your 1.5R would get hit first. So for trading probabilities and you're not looking at stop, I hit out. I never let my stops get hit. I hit out earlier than them getting ran. So if you're one of those guys who lets your stop get hit, well, the probability is we go up higher from this bar here. Now let's say you see bar 57 and you think bar 55 or bar 56 is a trap. First, I'll start off by saying 57 is a doji, not a bull bar. It is a bull bar. It's painted a bull bar, but it's a doji. So as a doji after a bear bar, so it's a pullback. So you buy this low. Well, the probability is going lower than higher. We hit 1R here before we hit 1R here. So where I like to trade is leg 1, leg 2s, assess the strength of the breakout, assess the strength of the pullback, and then what are the chances of us getting 1R before my stop gets hit at 1R, and I don't want my stop to hit. Let me know what type of setups you guys are taking, how you guys did today. I definitely think today was challenging. If you guys have a different outlook, let me know that too. I look at the markets from a very consistent perspective of market cycle and leg count. You get those 2 things right, you learn how to spot a breakout, and now you know. If you study breakouts inadvertently, you'll slowly learn where bad limit orders are at. A good breakout is a bad limit order. A bad breakout is a good limit order. So what do I mean by that? Bar 35 is a bad bearish breakout, so you put a limit order below 33 and it reverses. Limit order trading is more difficult because you're going to get filled with price movement against you. I do not limit order trade for that specific reason because I can never figure out when I should get out if price just keeps going against me, because if you want to short the high of 5, you put a limit order here, you get filled on 19, it goes in your favor, but then you rally here, the market rallies here. So you got to ask yourself, like, where do you get out? What are your rules? So for that reason, I only focus on market orders. I haven't done stop orders in a very long time because every once in a while I enter while the market's moving. The reason I do that as well is because although I trade on the 5-minute chart, I do reference the 15-minute. And if you think about it, the market is never actually stopping. It's just your perception of that time frame is stopping, right? So if I enter here on the 15-minute, bar 12 is the first hour, well, it's still going to move. Bar 6 is still moving. So whatever time frame you're trading, you're still entering on the bars moving on a different time frame. I'm not suggesting you guys just start entering when the market. It's a good habit to wait for the candle to close, and the majority of the time I wait for the candle to close. But if you were not to wait, there's your logic. It's that the higher time frame is going to be moved. The higher time frame bar is moving anyways. You enter here, the 6-minute bar is still moving. You enter here, the 7-minute bar is still moving. So that's that. A little bit of a shorter interview. Man, I just had a shower. I got toothpaste all over my shirt. All right, guys. You guys have a good one. Thank you for tuning in. Tomorrow I'll be doing the interview. Tomorrow I'll be doing another breakdown, and then we have a 4-day weekend. So yeah, stay tuned, guys. I'll talk to you guys in the Discord. Have a good one. Good night, everyone. Thank you for tuning in. Bye.